Great, buddy. Well, first things first, man. Thanks for coming in.
No worries, my pleasure, mate. Long time coming.
This has been a long time coming. And obviously, as one of our directors here at Motivate Finance, I have been you've been director for over a year. I've been looking forward to today and getting on the podcast. So welcome.
Thank you, man. Time flies when you're having fun, hey?
Time flies. Oh, we were just talking about this before the show. Obviously, 2 new kids. Well, 1 each.
Yeah,
Time is getting quicker.
it is. Yeah.
And I kind of wish it wouldn't, but it seems like it's just getting progressively faster. Like, we blink, it's freaking mid-June right now.
I know, man. Like, I remember New Year's like yesterday, really.
Yeah.
Remember going to your wedding, really.
Yeah. So
And here we go.
It's getting crazy, but full steam in. So I guess first things first, man. So obviously a lot of our clients and listeners, particularly coming from a finance perspective for yourself, I think, one of the things that we're sort of hearing and sort of seeing out there is, I guess, a question about where we're going with finance. The direction the banks are going, the direction that I guess we're kind of heading economically. Obviously, it kind of goes without saying that, the media is kind of saying one thing in terms of, these wars that are happening, these protests that are happening, these tariffs that Donald Trump's implementing, and everyone's thinking that the world's just going to freaking implode at some point.
Yeah.
But at the same time, over here in Australia, we are quite insulated from a lot of it, but I know a lot of the clients here, they do have a concern about interest rates, about banks, about lending, about how the hell they can freaking afford these property prices, considering that we've almost doubled in the last 5 years.
Mm-hmm.
So I guess to start with, man. So firstly, I mean, how do you think the overall banking market is at the moment for finance?
Yeah, look, it's come a long way over the last 5 years since COVID. The rates are a record level low. 0.1% cash rate. Who actually would have thought it would have got that low? You got fixed rates at 1.99%. So money's super cheap to, interest rates going up at a record rate in such a quick and short period, which it took really a lot of adapting from a lot of people, and not just, consumers, but also businesses, right? And now we've been at a stage prior to this year where there was a bit of a plateau. And now that we hit the peak of, let's say, the cash rate, and things were last few months being a couple of cash rate decreases. Really, for me, it's that affordability piece and the serviceability aspect. And really, from here, that's a big question mark for everyone. It's like, okay, house prices, they've gone up so much over the last 5 years, and now where does that sit with what we can afford? And I think that's where it becomes even more important to have the right people in your corner, and to have a broker and to review things and to do all of that. So as for kind of moving forward, I think it's one of those things with the banks. They're always going to find a way. There's always going to be, whether it be a new policy, whether it be something from the government. At the end of the day, there's a reason why they are probably some of the most profitable businesses in the whole world, right? These banks. So there is going to be something that they, whether it be 40-year loan terms, which I know that, that's something that has come into play recently with some lenders, not so much the big banks, but there's always going to be something that gets introduced to allow people to get into the market or to afford a property. So it's an exciting time, but I think us as brokers and being in this industry, we just have to constantly adapt to what happens around us.
Yeah. And look, I think that's a really good message for everyone, adapting.
Mm-hmm.
I mean, one of the things that we see all the time, right? And I think to your point, like, yes, the Australian banks. There was a article, and I've got it in front of me on Google, but you just type in like the Australian bank profit, right?
Mm-hmm.
So there was an article that came out a couple of months ago reviewing the stats for last year. The amount of profits the big 4 Australian banks make in comparison to most corporations around the planet, it kind of makes you sick.
Yeah.
And I say that because we obviously know that our banking system's a fucking scam. Like, the entire thing's a Ponzi scheme.
Yeah.
It's and I know I've done a whole episode on fractional reserve banking, but if the average person actually understood the mechanics of how our bank system works,
yeah,
there would be riots on the streets.
Yeah.
Like, it's a scam. Like, that the entire thing is a money-making scam for these big banks, right? And obviously all your tier 2, tier 3s are kind of from all the big 4.
Yeah.
But to your point, it's like the banks are going to be adapting.
Yeah.
Yes, and I kind of feel like right now, one of the things that I'm seeing personally from actually building our client strategies is like the property prices and markets increased, but it's almost like bank policy hasn't so much kept up.
Yes. Yeah.
And so one of the things that we're kind of seeing on a day-to-day basis is like less and less people can actually afford to get in.
Yeah.
There are clients that we're working with today, 5 years ago would have passed no problems, but today they can't because of the values, and we're talking about clients who are earning six figures.
Yeah. Yeah. It's insane.
So it's almost like in order for you to get a home nowadays, it's like you need to be earning well above the median wage.
Mm-hmm.
Like the median wage is a median wage for a reason. It's the middle number. Like we're now talking about only the top percentage of wealthy people in terms of income can afford to get in the market. That's not a good place to be.
Yeah.
But to what I think you're saying here is like it would be wise for clients and the people out there to be just as adaptable to what the banks are.
Yes.
Shit's changing.
Yeah.
If you're approaching this from a very fixed perspective and you're not flexible, you're not going to have any options.
Correct. Yeah.
So I do agree, man. We got to be as flexible as what the banks are, but they're always going to make money.
Yeah. Yeah.
The day's not going to come where they just
Correct.
can't afford to give people they want to give people money like nothing.
Yeah. Yeah. I tend to have a conversation with the clients a lot of the time. It's, a broker for a perspective or for a bank. Like no one actually wants to use us. We're just a stepping stone to help you get to, buying your property or, reaching your goals, investing in property, those kind of things. In a perfect world, but none of us would have any bloody debt. You know what I mean? None of us would, want any of that. But you kind of got to use them to your advantage to get to where you want to get to. Yes, we don't have to love the banks, but we kind of use them to help us get where we want to be.
Absolutely. And that's actually a really good point you brought to. I had this conversation with my brother-in-law a couple of weeks ago, right? And because he's still not quite really, he's not very investment savvy, right?
Mm-hmm.
So he's still, how do I put this? Like he's very resistant at the fact that people take out debt.
Mm-hmm.
He doesn't really understand the mechanics of
that old school mentality.
Right? And so, like I sort of explained to him, it's like we are using debt as a vehicle to expand your portfolio.
Mm-hmm.
It's a tool.
Yeah.
It's a tool. And if you use it properly and you play the game that the wealthy play it can become a very lucrative game.
Mm-hmm.
Obviously, there's risk. Obviously, there's things we've got to mitigate. Obviously, there's, we've got to make sure that we're doing this safely and we're doing it ethically. But it's a necessary evil.
Yeah.
And look, there is an argument to say that we should all just eject out and refuse to go to the banks and boycott them all. And I would love to sit here in a perfect world and say, let's just all do that. That ain't how the world works. And it's not just mortgages either. It's like, the amount of debt these guys are making from credit cards, car loans, personal loans, all these other ancillary types of debt that people are using just to consume bullshit.
Yeah.
Like, obviously, we're using the debt for investing. We use it to leverage, to buy more assets. But it's certainly an interesting time.
Yeah. Yeah, I think we're in a bit of a sliding doors moment in time. 12 months from today, who knows where things are going to be, whether it be credit policy, whether it be in the world. I think we're, in a moment in time where there's a lot happening and changing in really quick fashion. Yeah. Not just with AI.
Yeah, well, there's that catalyst too, right?
That too.
And so with that, right? So let's just say we look at the next 12 to 24 months.
Yeah.
What do you think will come from a banking and lending perspective? Like, because obviously, like in the market we're in right now, like we can't do this forever.
Yeah.
Like something's gonna have to give.
Yeah.
And what I mean when I say that, and this is to help our listeners sort of kind of understand where we're coming from when I ask this question. Like, we are importing 500,000 people here per year.
Yeah.
We are building around 120,000 homes a year.
Yeah.
So it's like we simply aren't building enough houses, and that's why prices are continuing to rocket, right?
Yeah.
But again, I guess my thought is like we can't facilitate this for 5 or 10 years because the gap is just going to get so bad to the point where like we actually end up breaking the market.
Mm-hmm.
Where no one can afford it. The top 5% accumulate all the property, like the government's, it creates this massive mess. So like I'm pretty confident that the banks are going to have to make some kind of policy change, like to either free something up, relax some kind of policy. There's going to be levers they're going to have to pull at some point.
Yeah,
right.
100%.
So your fingers on the pulse. Like, what would you say across the next, say, 12 or 24 months? What do you think the things that what levers do you think the banks could pull?
Yeah, look, I think probably one of the biggest ones under the microscope at the moment is the serviceability buffer.
Yep.
So most of your clients may or may not know, but typically when you approach a bank to get a home loan, you're going to have your interest rate, let's say it's 6%, but they actually assess your ability to afford the loan on a 9% interest rate. So
3%.
Yeah, they're effectively stress testing your ability to afford the loan if interest rates were to rise. Now, in a market where we're on the other side of it, where it's interest rates are reducing, the whole interest rate buffer, there is some question marks on whether it's even like, what's the point of the interest rate buffer if we're in a market where rates are decreasing, right? So that could be something where they review that 3% and maybe making it like a 2% buffer, or there's still being some form of safety net there to give comfort to the bank that in the event there were rates increasing. So that could be one. Now, like, there are some lenders that you may have not heard of before that do live in that space. So, there are 1% buffers or 2% interest rate buffers. So that could be probably the easiest thing. That could be the easiest lever to pull to improve servicing.
And just on that, because this is a really good point. So the servicing buffer was really came from the Royal Commission in 2017,
Yes,
right? Banks doing the wrong thing.
Yeah.
But just to your point, like, if we've got a 3% buffer now, let's just say that they were to change the entire policy across the broad spectrum of the entire market to, say, 2% is now the standard. Like, just that 1% change, and I'm just purely speculating here in terms of the numbers, but it's like another 30 or 50% of people can now afford to get in.
Yeah.
Just 1% like that.
Yeah.
You've just opened the door for tens of thousands of people across the country. So again, it makes sense to me that that's low-hanging fruit.
Yeah, it's really an easy avenue that they could just pull the trigger on.
Yeah.
Now, I guess it's one of those things. Ever since the Banking Royal Commission, with ASIC involved and all those kind of things, that's where it's that's the limiting factor at the moment to ease that kind of policy.
Yeah.
I think it makes financial sense to a degree. Like, 3% does seem to be a bit of a stretch. I know, saying that, back in 2020, things did increase by more than 3%, but now we're at a stage of, if it was to go up by, this is how I look at it, right? If, let's just say, interest rates were to go up by 3%, where would that leave the market? Like, where would that leave the Sydney market? Where would these individuals in Sydney, that the loans that they've got and the ratio of their income to their actual repayments, it's crazy. I think it's something like nearly 60% in Sydney, as opposed to in Perth, it's closer to the 40% mark. Yeah. So what would happen to those people? Like, there'd be defaults here, there, and everywhere. So I don't see it. But then there's that's that whole conversation of, like, we're in separate markets, right? WA market's different to the, New South Wales market, but we're all getting the same rates from the cash, like the RBA cash rate. So we're dictated by the same cash rate, whereas really every state should have their own cash rate.
I've been saying this for years,
so
I completely agree. That would solve a lot of problems too. Pretty quick.
Yeah. So there's that piece of it. I think the serviceability side of things is number one, and then there's, then it comes the conversation of, like, funding and, like, deposit. Like, how can you make it easier for people to get in that don't have the actual required deposit? So, there have been, I guess, the Labor government, the biggest thing that they're introducing, which is already in play at the moment, is that first home guarantee scheme, and increasing the price cap on how, up to 800,000 starting next year. Well, it's still in the works. It hasn't been fully implemented, but so there's a few things, but the serviceability piece, I'd probably say, is number one. Yeah,
and again, it's low hanging fruit.
Yeah,
it's a simple policy from ASIC that could completely reignite the market.
Yep.
And when I say reignite, obviously the market's gone stupid. It's just to help supply and help ease the supply burden, but. Ironically, and I think you've just hit this as well. Like, if we're in an increasing interest rate environment, it makes sense to have a servicing buffer.
Yeah.
If we're in a decreasing interest rate climate, again, I got to question if the servicing buffer is relevant at that point. Now I guess there is a question about how do we then quantify if we're increasing and decreasing, considering it's every 6 weeks and it's dictated by, so I guess that does make it a little bit difficult. But, if they 2017, right, Royal Commission, they implement the servicing buffer of 3%. Then when COVID happens, they obviously stimulate the market and do a bunch of things that ended up not so well working.
Yeah.
But interest rates rose more than 3% anyway. So what's the point?
Yeah, correct.
It's just a little silly. But again, we are kind of talking in hindsight as well.
Right.
So I understand that, the guys on the East Coast, particularly the RBA, it is, that they are trying to make the best decision for everybody, or as many people as they can.
Yeah.
But it's just, it kind of seems like it is a little bit, 8 years on it seems a little redundant now, considering that you've got all these other things happening. We need more houses.
Yes.
There's nothing that even just this, the fact that the government keeps harping on about the fact they're going to go build all these houses and they're just completely fucking missing it.
Yeah.
They're just not even remotely coming close to being able to solve it. Like, what they need to do is get the private investor to fix it.
Yep. Yeah, correct.
We're good.
Completely agree. But yeah, I guess contrary to a lot of opinion, the whole 40-year loan-term conversation as well, that's going to be something that will come into play eventually. I'm actually very pro for it.
Me too.
I think it's fantastic. It helps. Well, from a cash flow perspective, you can drive a larger asset base.
Yeah.
You can use your cash flow for other things. And a lot of people I guess a lot of people think you're getting a home loan, you're buying a property with the goal to pay it off in 30 years. It's not really the goal, right? Especially if you're investing in property. Like, you don't really need to pay off your investment property. You're almost just trying to keep it for as long as period as possible.
Yeah.
Devalue your debt. Just let the property market do its thing.
Yeah.
And I think that's the point where a lot of people miss it. They just see 40 years, oh crap, I'm going to be stuck with this home loan and I'm going to be 80 and, it's still going to be there. It's like, well, no, if you strategically use it to your advantage, and this goes back to that, what we were saying, right, then you can make it work in your best interest. So 40 years, I'm definitely pro for that. I'm not sure if that will come in, but yeah, that would be good.
Well, in our training session yesterday, we were talking about this, and back in like 1970, 15 grand for a house. Nowadays, that same house is worth $750.
Yeah.
Right. And if you had taken that mortgage out back then for 40 years, actually, let's say it was 50 years. Let's get extreme here. You still have that mortgage today. Assuming you've paid interest only, that means you would have a full mortgage on that house of $15,000.
Yeah.
There's nothing.
Give me that mortgage, man. I'll take it.
Give me 10 of it.
Yeah.
You know what I mean? But it's the same mechanic, right? And to your point, like if I could wave a magic wand and put all of my mortgage time frames to say 80 years, I would do it.
Yeah.
Because it's going to shrink my repayment. My house will be a lot more positive cash flow. The tenant's rent will knock that debt off. So even if the mortgage was 80-year time frame, doesn't mean I'm going to pay it off in 80 years.
No.
By me stretching it out, it's more positive.
Yeah.
I'll use that rental income to then drive the debt down. That debt will be gone in 15.
Yeah. Correct. Yeah.
Yeah.
Yeah. I think like having flexibility is probably one of the biggest things when it comes to selecting a right home loan. Like, and that's a big thing that I speak to about clients, right? Like, everyone is so fixated on interest rate, and you know for a fact I'm not the broker that's just gonna solely operate in a way just to get you the best rate, because any broker can do that. Like, who actually cares? Like, just Google best home loan interest rate. You don't actually need me. Just go do it that way. But where I love our job and what we can do is actually helping tailor and find a product that's going to be suited to their goals and trying to get them there and structure it in a way that's going to be best for them at the end of the day. And cash flow is a massive thing. It's not just interest rate. Like, I know for a fact I can get better interest rates on all my home loans I've got, but you don't see me getting the just going for that. There's other things that are just as important, from having things like redraws and offsets, and even just having a good online banking app. Like, you don't really need any credit cards or cash these days, so you kind of want a good app, right? Well, you want an app per se. Some banks don't, they don't really have a good banking app, so I think it ties in a lot in that too.
And with flexibility too, because I mean, one of the things that I have seen in the past is, again, a client's hyper fixated on just the lowest rate.
Yeah.
black and blue, that's all they give a shit about.
Yeah.
They want to ignore everything else you're saying or just want the loss rate, right?
Yeah.
Then, once the mortgage is approved and established and then, 2 months in, they want to try and start making some extra payments now and they can't because that was the terms and conditions of getting the lowest rate.
Yeah.
So it's like, by chasing the lowest rate, you've shot yourself in the foot with your overall strategy.
Yeah.
You're actually going to make a lot less money now long term because you were focused on one thing and not the other.
Yeah.
And so I agree. It's we've got to look at the overall strategy.
Yeah.
And fundamentally, the way I kind of put it, and it's same with property. The property location and title property is irrelevant.
Yeah.
The bank is relevant.
Yes.
It's the strategy that dictates the property. The strategy dictates the bank.
Mm-hmm.
The strategy dictates all of it.
Everything.
And it's really coming from a perspective, the perspective of what's going to be the best thing for the client strategy to have them win.
Yeah.
So I hear, man. And it's something that I wish a lot more people were aware of.
Yeah, look, it is super important, but it's a balance of everything, right? Yeah, it's not just that's the most important thing. It's just making sure you've got all the other aspects covered off too. Yeah, for sure.
Yeah, definitely. And so when it comes to I guess working with clients nowadays, right?
Yeah.
What are the common themes you kind of seeing with what are people sort of wanting nowadays when it comes to the mortgages and?
Yeah, look, I think a lot of people tend to know, what your offset accounts are these days, and those certain product features. I think there's still a lot of clients out there that want to approach a bank that they've heard of or they just know the name of. If you tend to some not so much, but they want that certainty. They want that trust to know that that bank's going to be there in 5, 10, 15 years. So, I mean, that's just speaks of the figures of the big four banks. Like with brokers, most of the volumes are still written with the big four and obviously maybe adding Macquarie to the piece as well. So the actual market share of where a lot of the loans go to is still those bigger banks. And I think that's psychologically because people just have that trust factor. They see them, on the bus or advertised somewhere, or they just see that as a bit of a safety net, and I think that's tied to that wanting that security because property is that they want that comfort, right? So I think there's a bit of that. Also, the offset accounts are a big one, and really, I think probably one of the biggest things that's really cool to see now is the market share of brokers, and how the recent stat I got from the MFAA, which is our governing body, is it was 76.8% market share of new loans were written by brokers in Australia, which is really, the banks and branch land is probably going to become somewhat redundant moving forward now. Hey, so that's really good to see. So I think a lot of people are kind of trusting a broker to do that legwork for them and to find the best solution for them. So
it's almost like being in the industry we're in. It's so crazy to me that people don't use brokers.
Yeah.
And for those this is the first time listening, most people traditionally, when it comes to getting a loan, would go and speak to their bank.
Yep.
Because the bank knows you.
Yep.
They don't know you. You're just a fucking number. But the point is like if you're used to working with ANZ and you've had your bank account with them since you were 6 years old, like generally speaking, most people would say, "Oh, I'm going to go to ANZ and talk to them about getting an investment property."
Yeah.
But the thing people don't really understand is there are about 108, 112 lenders nowadays, something like that. There are over 100 lenders in the country.
Yeah.
Then they all specialize in something.
Mm-hmm.
So there are some banks that are really good for self-employed people, some banks that are terrible.
Yeah.
Just with the way that they, use your add backs and deductions and, the way they count depreciation, for example.
Yeah.
There are some banks that are really good with doctors and nurses and medical workers. There are banks that are really good with sole traders. Other banks are really good companies. So they've all got their kind of niche. Again, the average person isn't really aware of what those niches are.
No.
And so they'll go to ANZ. They'll say, "Hey, ANZ, I want to buy an investment property." They'll look at your situation. They'll give you, we can lend you $600,000.
Yeah.
You go to Commonwealth Bank, you can borrow $800,000. Why?
Yep.
Because their policy, right? And it's their niche. Whereas when you go to an independent broker like Motivate Finance, we're working on behalf of 20 to 30 lenders.
Yep.
We've got 20 to 30 lenders that we're assessing all of their different mortgages and providing you the best bank, not just the best mortgage with ANZ.
That's right.
You know?
Yeah.
And at the end of the day, like, because we get paid by the bank, it doesn't matter who we go to, it's pretty much the same pay anyway.
Correct.
It kind of means that the broker's able to work for you versus, you know, you going into that branch, speaking to the ANZ broker. The ANZ broker's still making commission from ANZ, but he can only offer you ANZ's mortgages. You know, so again, it is kind of crazy to me that people just don't use brokers as the standard.
Yeah.
But the fact that it's, you know, 86.4?
76.8.
76.8. That's showing that, 3/4 of people are using brokers nowadays, which is fantastic. Awesome.
Yeah. It's heading in the right direction. I think that numbers will gradually increase even more, but it is cool to see.
Yeah, and it's like the other thing too, because I think, you know, prior to the Royal Commission, there was an element where, I mean, because the finance industry in the way that we're operating has only been around for a couple of decades.
Yes.
Right? I mean, 60s and 70s, like brokers, they weren't brokers. There was there was a couple of banks and you go to your local one.
Yeah.
You know what I mean? So even just the fact that, yes, technology is advancing very quickly, but the fact of the matter is, it's like, this is an industry that didn't exist 50 years ago. No. And it's now starting to really get its legs. But prior to the Royal Commission, I do remember, I mean, most brokers were kind of looked at, what's the way to put it? Like, people were a little bit skeptical.
Yeah.
You know, people, it kind of had that sort of, and I don't want to say like a dirty reputation, because I don't think that was the case, but it was more so, like, it wasn't as well regulated and it wasn't as credible that it is today.
Yeah. And
since the Royal Commission in 2017, there was obviously a massive overhaul in the way the system works. But nowadays, it's like, we are very tightly regulated.
Yeah.
There is an extreme amount of oversight that we've got to make sure that we're doing the right thing and operating in clients' best interest and proving that and noting it and tracking it all and really ensuring that, you know, we do have the client's interest at the forefront. But even just the way that the system works, like even just with like Quickly, you know what I mean?
Yeah.
It's like, we're not like we almost can't recommend them a mortgage that's not suitable.
Yeah.
Like the system just doesn't comply. Like, it just doesn't.
Exactly.
It like
doesn't allow
it. You know what I mean? So I think this is a good thing in the sense that, you know, in one hand, yes, the Royal Commission has kind of made our lives a lot harder.
Yeah.
With the servicing buffers, one of them.
Yeah.
And that was one of the main things that came out from the Royal Commission, right? And that's obviously made our lives incredibly hard. But one of the good things is it has brought more credibility to the finance industry.
Yes.
And brokers in particular. And in turn, I think it's actually almost spotlighted how, I'm going to use this term a little bit lightly, how unethical the banks actually are.
Yeah.
You know, which is, I think it's a good place to be.
Yeah. Well, it's somewhat of a contradictory policy, the old best interest duty that brokers need to act with, because you go to a branch and where's their best interest, because it's sorry, I should say hypocritical of them, right? Because
definitely
they know that there's a better option down the road, but because it's branch, they just offer what they can offer. Yeah. So that's the piece of where it's really important to.
Well, yeah, I mean, I've never seen an in-house broker at a bank recommend a person to go speak to an independent broker.
No.
Who can give you different advice on 20 different products, not just theirs. So yeah, it's.
Yeah.
That's a question, because I know us as independent brokers, like, we have to work within best interest, and that's obviously part of it. I don't actually think that's a part of what the banks do.
Yeah.
I don't think that's. I don't think the best interest duty
applies to
banks.
Yeah.
Which is kind of a scam.
Yeah. Yeah. Well, that's the piece where it doesn't make sense, right? It's just, yeah.
It's kind of like, you'd think that, you know, they're the credible, trustworthy pillars of the community, whereas, you know, these brokers are, you know, seen as cowboys, but it's kind of the opposite now. Like, it's almost like we're the credible ones. The banks are the ones who are just scammers.
Yeah.
You know, willingly taking people's money and sort of blindly lying to them.
Yeah.
So yeah, man, it's an interesting time.
Mm.
It is interesting time.
100%.
But it's one of those where I think, yeah, it's hard, man, because, like, we need more houses.
Yeah.
It's like, yes, we have a vested interest in people buying houses, right? But again, the healthiest market's a balanced market.
Yeah.
You know, so having a market like we're in today, where it's just booming, crazy, everyone's running around with their heads on fluck. Yeah, sure, everyone's making money. Like, clients are making shitloads of money.
Yeah.
But it's not healthy.
Yeah.
For the overall society.
Yeah.
Because if this continues, we get to a point where in 5 years' time, no one can afford it, only the super wealthy.
Yeah.
And then it's like everything starts to really fizzle out and taper off. Whereas, again, the opposite side of things, we've got too many houses, again, no one wants to buy anything.
Correct.
It fizzles out. So like I'm a firm believer in having a very healthy, buoyant market with a very good balance.
Yeah.
We ain't balanced anymore.
Yeah. Like what I just don't get how it's going to, like, with property, right? You can't just click your fingers and create 100,000 more new homes, right? Yes, the Labor government or whatever government can say, hey, we want to, we promise 200,000 homes being built in this period of time. But what's actually going to happen between now and those houses actually getting built?
Well, I know. Like hundreds of thousands of people coming here.
Yeah. Yeah. And then creating how the prices are going to go up. And it's just a mad cycle, right? So
yeah.
That's the scary part. I think I was looking at the other day. I think it was around December. We were at 5,000 properties on the market in WA completely. I think including land and everything. And I think it's dipped now back to around that 4,000 mark. Correct me if I'm wrong, but it was going up and now it's gone back down. Yeah. And it's like we're almost going back to where we were and we're playing catch up now.
Yeah.
And I think a lot of it stems from people, if they want to sell their house, they got nowhere to go.
Yeah.
You sell your house, it's like, okay, it's a hard market to then buy your next property, right? And who wants to be homeless and, who wants to live with your parents or something in between before you get your next home. So that's, you could probably speak to that, but that's maybe a reason why there's not a lot of properties coming on the market and land itself is a little bit more scarce as well, isn't it?
Yeah, well, the other thing too, I mean, because when you think about like sentiment, all right? Because I mean, we've got a sentiment-based economy. People are confident, spend more money, economy booms, and vice versa. But I mean, especially investors. Now, obviously, owner-occupiers are a bit of a different case because they're generally speaking emotionally purchasing for lifestyle.
Yeah.
Investors are logically purchasing for income. And wealth. Yeah. And so right now, while we do have a booming market, it's like most investors, like you'd be crazy to sell right now.
Mm-hmm.
It's more so what I'm finding is the let's just say the less informed investors think, oh shit, it's boomed, therefore now we sell.
Mm-hmm.
The ones who are really paying attention to the push and pull mechanics, like population growth, the overall construction supplying, you kind of sort of understand that it's not slowing down yet.
Yeah.
And so the level of investors right now who want to sell versus the number of sellers who are going to be wanting to sell the next 3 to 5 years once we're a lot more confident that we are at that kind of peak point.
Yeah.
Because again, if the market's still growing, like you're kind of crazy to sell.
Yeah, that's right.
And I mean, one example of this, I've got a client who hit me up about this, right? This particular topic about, hey, I've made a couple $100,000, like I'm kind of crazy not to sell right now and get that money. And I'm like, hey, look, here's some data. Here's population growth. Here's sort of X, Y, and Z. If you were to sell today versus just in 12 months, you're probably going to miss another 10% growth.
Mm-hmm.
Probably.
Yeah.
$750,000 worth of property prices out there in median, that's $75,000.
Yeah. So
it's like you may be crazy to do that now versus saying 12 months, 24 months as the market still goes. And so again, like that is always going to restrict the overall number of sales.
Yeah.
All right.
Yeah.
Let's fast forward, and I know it's hard to say this, and I try and say this. I try and say this responsibly so that it doesn't come across that I'm just being very optimistic here. I can't see the market slowing for the next at least 2 years.
Yeah.
Just purely based on the levels of immigration, the lack of construction, the lack of skilled workers, the overall banking policy, the regulations and restrictions around banking policy. I can't see the supply and demand changing in a big way. And I'm not talking about WA in particular. I'm talking about nationwide.
Yeah.
So with that said, like unless the population reduces at a serious level very quickly, which I can't see that happening.
Yeah.
Like, okay, let's knock on for a second. Let's say that, the new COVID was to be released and that's like a bowler with like a fucking 90% death rate, like, sure, let's knock on wood that never happens. But like, okay, maybe. If we go to global war and they start dropping nukes all over Australia, again, don't think that's going to happen, but maybe. That's one thing. The other way is we just build a stupid amount of homes really quickly. And then we've got way too many houses for the people and then the market balances. I don't see those two things happening. I think if we were to seriously put money on, do we think those things are going to happen or not? You're almost crazy to think they're going to happen.
Yeah, I agree.
You know, so that being said, like most people, I'm pretty confident are aware that they just know it's not the right time to sell. You know, it's coming, but it's not the right time. Sure, there are people like my parents, right, where they've just retired. You know, so they've invested very heavily over the last sort of 8 years, doing really, really well. They're now starting to liquidate their properties. But it's got nothing to do with the market and everything to do with just they want to now start liquidating and actually living off their
lifestyle.
Exactly, right? So, you know, for that very small percentage of the market who are selling because it's just their time, that's just not the general investor, though. You know, the general investor is that they're kind of waiting to hit to the top and then they want to try and sell at the right point. But between now and then, and you're right, man, it's like we can't just wave a magic wand and just have all this new stock come on. Like, you know, I mean, firstly, the amount of red tape that it takes to get a DA approval to go and chop up an old farm into a new estate, all right? Then you got all the work you have to put on the site for the drainage, the sewage, the roads, like... That shit doesn't happen overnight.
No.
That takes like months, if not years to do, depending on the scale. Then you've got, you know, all the people having the financial capacity to go and purchase them. And that's one of the things that's struggling right now is the fact that, you know, if you think about 100 people who want to go and buy an investment property, 30% of them right now can actually afford to do it from a lending perspective. Like, you know, there is a big bunch of people right now that were coming through our door and it's like, sorry, you don't have enough income. There's not enough deposit here. Like there's things you're going to have to go and do and sort out because just the bank policies are too tight. So it's like people want to do it. There's like a chokehold when it comes to the lending system, you know? So it's just, unless there is some serious changes, we ain't going to fix this problem. And then you've got, you know, the Labor, and I'm going to stop branching out Labor pretty soon, I hope. But, you know, they're very pro-immigration. I'm pro-immigration, but not at the levels that they're doing it and how unchecked it is. You know, and this is where, you know, in our industry, obviously it's, you know, we're on the tap of this, right? But like, you can't just import a shitload of people in here thinking that all your problems are just going to be solved automatically. Like, yes, you've solved some issues when it comes to things like inflation, quantitative easing, right? Inflation's at 7% because you've been printing bullshit money through COVID. You import a couple million people, soaks up the inflation comes down. Sure, you've ticked the box, but you fucked the housing market.
Well and truly.
You know what I mean? So there's other things that you're just obviously not paying attention. And one of the catalysts that we're seeing on the street now is, you know, I mean, we've got one on our street where there's 4 families living in one house because they've all just come here straight from overseas. They're all living in the same house over there, but it was just a way smaller house. Now it's a much bigger house. But that's what people are forced to do. Because you're not paying attention to, you know, where are the people going to come into, you know, what jobs are available, where are it's just, it's almost like there's no foresight. But hopefully someone listens to this and starts making some better decisions.
Do you think there's a world in WA where we're going to move towards that apartment living and, you know, apartments getting off the ground a bit more in Perth? Because seems like that's the easy avenue to increase supply because it's just, you know, basically one tower. Whether the money is in it for the developer is probably the next question. Can they actually build it and profit from it to be able to sell it is probably the other piece of it. But there's also like, when is there going to be a market for that kind of living here in Perth compared to all these overseas cities that are? So that's, what are your thoughts on that?
So, this is a bit of a loaded question. Because we are like, so the way I view Perth right now, I kind of feel like we're adolescents. Right. We've gone from you know, I mean, look, Perth was established around 200 years ago when it became a city. It was a big country town for a while. Then it kind of became this like metro city. And really, like, a part of the problem, I kind of feel like we're in that kind of in-between period.
Yeah.
Where we're going from like a metro city to like an actual major city, right? Now, when we get to that major city point, and that may or may not be in our lifetime, right? The majority of the market will be apartments.
Yeah.
It has to be. There's literally no other option, right? The question is, how long is that going to take, and how fast and how willing are people going to be adapting, right? So that's, I guess, sort of the overall broader context. Now, I actually went to a conference with the Property Council last week, and it was called the Property Council's Australia's Western Gateway Perth Investment Opportunities. Now, that whole conference was really about like we in WA, like Perth as a city is actually critically important for the overall wealth in Australia.
Yeah.
Right. And there's a few things to this. I mean, obviously, number one, we've got the biggest land of any state in the world, right? So WA, West Australia, biggest state in the planet. Because of how big, and it's almost a third of the country, or I think it's just over a third of the country. Like from, let's just say the Kimberleys up north, all the way to the very southern points of, say, Albany, we have such a diverse landscape. From all up to Kununurra, you got red dirt, red rocks, all the way through to the Pilbara, Gascoyne, all the way down to the wheat belt, goldfields, all the way down south. Like we've got very thriving farming.
Yeah.
Now, when I say thriving, yes, there's problems with it. I have got a farm myself. I understand the sheep and all the bullshit that Labor's doing, but like we have a very diverse economy in terms of what we're producing here. We have a shitload of raw material, a shitload of resources. Now, yes, I do have a bit of a problem with our lack of manufacturing, but the amount of iron ore, lithium, copper, I mean, we've got a huge amount of deposits here because of how big we are.
Yeah. Now,
our industry, and I want to be careful here because I don't want people to just think that everything is, and this is where a lot of people's perspective, like it's all, everything about WA is all about mining. It's not all about mining.
No.
All right.
No.
Yes, it's a big chunk of our economy. It's a big chunk of our GDP and our wealth as a state, but it employs around 100,000 people. Now, right now, a big chunk of that 100,000 people are guys on the East Coast in New Zealand because there's not enough people in WA to fill those roles, right? So, like, the amount of wealth that's actually staying in WA isn't really what I think most people sort of realise, right? So I guess the overall, what I'm trying to say here is the overall value of WA to Australia is worth more than any other state, all right? So then you got Perth as this kind of like isolated city, and yes, because we have the biggest state, and we're on obviously the western coast of that state, we're also the most isolated city in the world, right? So in terms of, I mean, our closest city is Adelaide, other side of the fucking country.
Yeah.
Like no other city is as isolated as what we are. So that for a lot of people, and really what a lot of this conference was talking about is like when you go to places like Europe, you go to like Africa, the Middle East, like all these, America, it's like when people think of Perth, like what do they think of? They think of isolation. They think of like this little tiny city in the middle of nowhere, like nothing's going on.
Yeah.
But that's just the normal organic sort of view of it, right? However, we have the most populous time zone in the world because we share it with China. So when it comes to things like, for example, and this is why a lot of, especially the last couple of decades, like a lot of Chinese businesses, they invest in WA. Obviously, we've got the resources. I mean, like WA, we provide in terms of iron ore to say China, it's huge, right? Our exports, I mean, when it comes to wool, sheep, livestock, iron ore, raw materials, we essentially export it all, not all of it, but we export a shit ton of it.
Yeah.
It all gets manufactured overseas and produced overseas, and then it comes back to us in terms of the goods that we're sort of buying every day. There is an element that's extraordinarily inefficient. Yes, we're sending the stuff overseas for cheap labor. And yes, we can buy those products back cheaper, and that's why things like TVs and computers and shit are just getting cheaper by the year. But like it does mean that we are taking on some of the jobs that could be here and taking them over there. Now, if they were to stay here, it'd be more expensive. Like to have an Aussie company build MacBooks versus those slaves that are in China, obviously it's cheaper in China. extraordinarily unethical. And yes, I did use the word slave just then because most of them are slaves and they're forced labor. But it's one of those ones where, like we have we have a lot of money that we're essentially selling to the rest of the world.
Yeah.
Right. In terms of our goods and services. So that makes us extraordinarily valuable. So now comes the conversation is, well, what does this now look like across the next 20 to 40 years, right? Because like our population's growing.
Yeah.
The more people that come here, the more that want to come here. And that's the same with like any kind of city, right? It's like, they start building schools and people start coming there. The more people that go there, the more people want to be there because it's more friends, more family, more community, and it just kind of exponentially grows from that point. So the question then begs, well, then how does Perth then adapt to that?
Yeah.
Because, and I know we did this exercise the other day when we're doing some training with the team. But, Perth, what you see in grey, and for the guys at home, they can sort of see this on the map. But, from Two Rocks all the way down to Dawesville, that's the Perth metro area. Yeah. 200 years ago, we were a town, we're now a city.
Mm-hmm.
They're projecting that by 2040, our population will be double again.
Yeah.
So that means that we need to double the size of what Perth is. We need to double the schools, hospitals, train stations, houses, shopping centres, road sizes, bus stops, you name it, we need double. We can't do that.
No.
And so, this is one of the reasons why I'm extraordinarily confident across the next 100 years, like the property market's not going to change in terms of how it's performed. Yeah. And I know when we talk to people about, their grandma buying a house back in the day for $5,000, now it's worth $1 million. Like, yes, that means it's not going to change. It's going to continue doing that because there's just too many people coming here. We can't keep up.
Yeah.
But the problem that we've got is that when we do develop, there's kind of two ways. There's urban sprawl, which is us physically spreading the footprint of Perth and growing the outer suburbs with these new land estates.
Yeah.
The problem with that, it's very expensive. So they've got to extend freeways and train lines, and they've got to then start redeveloping schools and add more services out there and things like that. The other way is called urban densification, right, where they're just essentially cramming more people in the same square kilometre. Now, when you go to places like, for example, New York, right, where this is this little tiny landmass. I mean, New York's up here. Manhattan is this island. They don't have the ability to sprawl because they start sprawling, they're now on the water.
Yeah.
All right. And yes, I'd love to see a big skyscraper in the middle of the river, but they ain't doing it. Right. So really what it means, especially for places like New York, I mean, they just build upwards and they densify. When you go to places like China, right? So, I mean, I know I went to Guangzhou a couple of years ago. Now this is a smaller city outside of Hong Kong. There's like 27 million people in that city. So it's like bigger than the Australian population, or it was at the time. And it's like you walk in there, everything is a skyscraper.
Mm-hmm.
Everything. And you've got a culture where there's so many people. The only way you can possibly live is everyone's living in an apartment.
Yeah.
Like you don't have the ability to just live in a house when the entire street are just skyscrapers. We've got 10,000 people in a building.
Yeah.
For you to just hold that land and have your family, not feasible at all. The reality is, though, it is a function of supply and demand. So it's a function of population. Now, because we have a huge amount of land mass and we've got, around 2.5 million people in Perth, like we're actually very spread out, and we've basically got no one here as compared to these dense cities. Yeah. But the problem is, like, we're only going to get denser.
Yeah.
And as we get denser, there's going to be more and more demand for apartments. And not so much that's what the people are demanding. It's more a case of, hey guys, this is all we can do because there's no other land. We can't keep building out. We're going to have to start, basically buying and accumulating, these pockets and areas and then just redeveloping into towers.
Yeah. Now,
when you go to places like, because you've been to Barcelona.
Yes. Yeah.
Cool.
Yeah.
What do you notice in Barcelona? Like every friggin', and I noticed this when I went there, and it was a bit of a culture shock when I went there. But basically, I mean, you look at Barcelona, right? And in particular, you look at all these streets and all these blocks.
The same.
Well, not that they're all the same, but you go to any random street and it's like they're all just towers. 1, 2, 3, 4, 5. That's a 6-story building, and they have literally built that everywhere. And like each one of these little blocks is its own little community.
Yeah.
And you've got 10,000 people living on that little block, or 5,000, whatever it is. But it's like if you were to take an image of what Perth looks like, you've probably got 1,000 people in the same size. Here you've got, and it's the only way we can sort of develop. And you look how what that actually is.
Yeah.
Now the thing to remember, they are way older than us. So it's like they've had like hundreds and hundreds and hundreds of years to get to this point. We've only had 200.
Yeah.
And so, like I said, like I kind of feel like in a way, we're kind of like in that sort of adolescent sort of teenager phase where we're going from a town into a major city, and we will be an even bigger city in the future. And in fact, I like to sort of show this as a comparison of Perth side by side with Los Angeles.
Yeah.
LA, right? Very similar in a lot of ways. I mean, we're all Western countries. You know, we've got a lot of our economies based off the US economy and how they perform. In terms of a country, you know, it's a very similar size country.
Yeah.
It was first founded on the East Coast, and then we kind of created like a satellite city on the West Coast, same as LA. We've got a very similar climate. So again, a bit more of that temperate, warmer, drier climate, just like the way LA is. And basically, you know, they've got a couple of very key industries holding up the whole city. Like for us, a lot of it's mining, healthcare and social assistance, and education. Whereas like LA, it's, you know, massive Hollywood, you know, and it's again, you've got a couple of key industries holding up the whole city. And so
what you're saying is we need a Vegas in Perth, right? Just about a few hours out.
Yeah. Well, that may or not be coming, but you know, and look, I mean, look, Vegas is its own. That's its own sort of. It's a bit of a different kettle of fish.
Yeah.
Because you've got a that's more of like an entertainment kind of hub.
Yeah.
You know, in the middle of the frigging desert. But I mean, for us as well, because a lot of people, when it comes to Perth, like, so I'll give you an example. My brother, is really good friends with Sean Slater. So that's Kelly Slater's brother.
Yep.
Best surfer in the world.
Yep.
Right.
Yeah.
You know, and there's kind of jokes about like. Because like my brother sort of mentioned to him that, oh, my little brother lives in Perth. He's like, why the fuck is he in, like, what's in Perth? Like, why doesn't he live in Margaret River? Like, everyone knows Margaret River around the world, but they don't know about Perth.
Yeah.
You know, there was in that seminar I went to last week, there was a guy there who's been living in the UK for the last like 5 years.
Yeah.
Everyone knows about the Margaret River wines.
Yeah. Wow.
And when you think about WA, you think, oh, you know, that Margaret River area, that region is like, you know, some of the best wine in the world. And it is. But it's like, when it comes to WA, it's like they know Margaret River.
Yeah.
So then when it comes to the outlook of Perth, having Perth as a place to invest or a place to, you know, want to start a business or a place to want to move your family, it's just, why? Like, what's, like, and there's this kind of, and I wouldn't say negative sentiment, because I don't think it's necessarily negative, but it's just, they're just very unaware of it. You know what I mean? And so, like, a part of the conversation is, well, firstly, what are we going to be known for here? I mean, right now, you know, especially around a lot of the world, for Perth, it's the fact that we're a mining hub. So you've got a lot of guys coming here from, you know, NZ in particular, got a lot of guys coming from Europe, got a lot of guys coming from like Southeast Asia, coming here to just get jobs in the mines, right? And where they can work in better conditions, safer conditions, earn 3 times the money.
Yeah.
It just makes sense. But as the population grows, like whether we like it or not, we're going to have to adapt apartments at some point.
Yeah, for sure.
You know, but then the question is, because you've got, you know, and look, you grew up on, was it 600 odd squares, 700 squares?
Yeah, something like that.
You know what I mean? I I grew up on something pretty similar. Whereas nowadays, is like the average house is on 350 squares.
Yeah.
That's like half of what we were used to. But notice how that's the norm.
Yeah.
Notice how when it comes to the average person coming here, like when they look at 350 squares in terms of a block size, it's like, cool.
Yeah.
They think nothing of it.
Yeah.
I used to think that was crazy.
Yeah.
I used to think, who the hell would want to live on such a small block? Like, I want a quarter acre, right?
Yeah.
But again, it's just that old school mentality of
100%.
not, like I was saying before, not really adapting.
Yeah.
There are a big portion of our city right now in Perth where people still have that kind of old school mentality of, hey, I want a house with a block, detached house. I want my backyard with, I can have pets and kids. And I agree with it. And right now, that's where I'm at too.
Yeah.
That's where I live in. But whether we like it or not, the next 20, 30 years, when apartments are really the main kind of developments, whether we like it or not, people are going to have to just accept it.
Yep.
You know? Now, at the same time, and I guess one thing to consider with that, I don't, like how's that going to look? I'm not sure. Like what I would assume, and this is just purely my best guesswork, what I would assume is when you think about Perth, because obviously right now you got the Perth CBD, it's only apartments.
Yeah.
You've got like that kind of Burswood, Rivervale, where there's a few big apartment buildings that have stacked up. West Perth, Subiaco, Leederville, again a bunch of apartments. Outside of that, like most of it still is all kind of houses. So what I would assume is what will very likely happen first is a close to all your arterial roads, like the Freeway North, Freeway South, even along like say Canning Highway, right? You can see apartments.
There's a fair few around that Mount Pleasant area.
Exactly, right? They're just popping up like nothing. What you'll end up finding is along the main roads and along a lot of that kind of prime real estate where a lot of commercial stuff is like developers will start buying that out and then just raising apartments.
Yeah.
So you'll find that it's going to be very close to like either the coast or freeways north and south or just the main roads.
Yeah.
But again, 10 years, 15 years, as all that gets bought out and developed, they'll start having to sprawl out from there. You know what I mean? I do see right now places, around say like Joondalup, places like Coburn, Rockingham, Mandurah, where you've got these big hubs where they are building shopping centres and redeveloping, the train stations and they are building apartment buildings near them. And again, it's being able to densify the city centre of say Mandurah or the city centre of Rockingham or Coburn or Gosnells, Cannington, all these kind of hubs where you've got, Belmont's a huge, where they're starting to do a lot more of that stuff. Like you're going to find those hubs near the shopping centre because people want lifestyle. Yeah. One of the ones I really do like, the Carron shops. Yeah. That's our local, right? Yeah. The apartments on the west side. Yeah. Where like Holy Moly is. Yes. Like those ones. Have you seen those? Side,
yeah. They're fantastic, man.
Beautiful. But that I've said to Nicole a couple of times, it's like, maybe we look at picking one of those up. Yeah. Just when we retire. Yeah. So it's like,
it's a good spot.
Kids are grown up, they're out of the house. We can look at downsizing. If we get like a 2-bedroom, 2-bathroom apartment at the shopping centre, Ocean View's one side, you got carry-up shops down below. Like that kind of lifestyle is what a lot of people are looking for. Yeah. Now when they come here from, because you got to remember, like most of the population growth is from overseas. Yeah. When they come here from Asia, Middle East, Africa, like not only are they used to apartments there, but because we are a lot more forward thinking here in terms of how we're developing them. Like one of the things you notice about a lot of the new apartments, they're not just apartments. Yeah. They've got commercial down the bottom, like a little cafe down the bottom. Yeah. They've got gyms, they've got saunas, they've got lifestyle, they've got all these different things that they're adding to it to really kind of create that overall lifestyle appeal. Like that's what people want. Yeah. So again, you got these overseas immigrants come over here. They're like, holy shit, you've got what in the building? And it's like, the buy-in from the overseas, person coming here to buy and move and live in, like a lot of them blown away of the standards of how we're developing them. So I do see it becoming a really big thing in the future. So like I said, that was a very loaded answer to your question, but I'm trying to hold on as hard as I can to land. Yeah. Yeah. And this is where, even though this is what's coming, even more reason why our clients should be buying houses with land. Yeah. Because all it means is in 20, 30 years, when most people are buying apartments, you're the one who's got land, mate, your prices are astronomical. Yeah. Because what you'll find, and you're seeing this now, again, go back, I grew up in Mannington, right? So the block I grew up on was like 800 squares or something. Mm-hmm. Nowadays, that would fit 3 houses. Mm-hmm. With the way people, so again, like right now, the guys who are buying those 300 square meter blocks or whatever, like you hold on to that, you watch the apartments start rising left, right, and center. Just by default that you own a small portion of land, like your prices will be astronomical in comparison. Yeah. And that fundamentally is using the ripple effect mechanic to then drive your wealth up. Yeah. So it's one of those ones that I'm not particularly afraid of it. I think it's coming, and I think we're going to have to embrace it whether we like it or not because of how big the population is going to get. So hope that, yeah.
I think it's just something in time, right? But yeah.
That's the thing, man. With a lot of this stuff, like really what we're trying to do here is have our best guesswork about what the future is going to look like. Yeah. But having said that, the closer you are to guessing, the more money you're going to make. Yeah. I mean, it's no different to, going back to 1990 and then buying shares in Amazon. You know what I mean? It's like, what is Amazon? Oh, it's just this future company. If you could have picked that and picked the future, like you'd be a billionaire today. Yeah. $1,000 in Amazon and 980. Now I don't even know if they're around 980. Jeff Bezos' garage, but like the point is like when you're able to pick the future blue chip or pick the future potential and try and you're somewhat correct, the amount of money you make is wild.
Yeah.
Because you're the one who's willing to take that risk on what the future is going to look like. Yeah. And so, again, I hope this does help. The average listener out there somewhat make a better decision in terms of what you're buying, why you're buying it, and the direction we're heading. Because whether we like it or not, Perth is only going to grow from here.
Yeah, it just cements to me that just property is just that safe bet. I know nothing's guaranteed, but isn't it just like
in Australia?
Yeah,
100%.
It's kind of crazy to think that people wouldn't look at it or wouldn't consider it as a wealth creation tool, right? Yeah. It's unbelievable. Just the population aspect of it, and just what you've just gone through.
Yeah,
100%.
And look, I know I mentioned this the other day in training, right? Like when you go to the US, a whole different market.
Yeah.
And they don't grow as well as what we do here.
Mm-hmm.
Yes, every state's different. They've all got different metrics in terms of people and construction and all that sort of stuff. But the properties I've got over there, they haven't grown at all.
Mm-hmm.
The cash flow is good because they're more cash flow assets. Whereas over here, our cash flow is really low, but they grow really well.
Yeah.
And so, it's only because of how strong the population is growing by percentage.
Mm-hmm.
When we look at ABS demographics, let me just bring that up. Annual growth is like 484,000 people. So just under 2%. Like 104,000 of that is natural increase. That's, births versus deaths, but almost 400,000 of that was overseas migration. So just this alone, just that stat alone is the main that's the main reason why we've performed so well over the last 100 years, and why I'm so confident over the next 100 years it ain't going to change.
Yeah,
because the amount of people coming here, and yes, like I said before, the time zone's an important one, because the time zone that we share with Beijing in particular, Hong Kong and Beijing, that means that it's actually very easy for anyone in our time zone to do business with us because it's operating at the same time.
Yeah.
Now I know with technology nowadays, yes, we can do business with Europe, and it doesn't really make a difference because emails can sit there for 12 hours. But when it comes to a lot of these, especially the businesses that need results quickly, like sharing your time zone's pretty important.
Yeah.
And so, obviously you got Indonesia as well.
Mm-hmm.
Now Indonesia isn't a huge producer, but they've got a massive population.
Yeah.
I think they've hit 1 billion people.
Yeah. Right.
I'm pretty sure. I think they're in the top 5 most populated countries in the world, behind China, India, Brazil, maybe Bangladesh, and I think it's Indonesia is up there. It's got 1 billion people, but the same thing. It's like when it comes to trading, when it comes to buying and selling, it's like I'm very confident that a lot more people will be using Perth as a means of a means of moving somewhere safer, but still being able to talk to your family at the same time. You're still being able to do business and all that sort of stuff. But even geographically, like anyone on the East Coast, which is most of our population, they want to get to Europe. A lot of them got to come through Perth.
Yeah.
You want to get to Africa and South Africa, you got to come through Perth.
Mm-hmm.
You want to get to the Middle East, or to Asia. Like a lot of cases, they got to come to Perth.
Mm-hmm.
Yes, there's direct flights, but it's quicker and easier to come to Perth.
Mm-hmm.
So that in itself puts us in a really good spot. But then even without those things, just in the last 50 years, let's say, the amount of population growth here has been insane.
Mm-hmm.
That's what's driving it.
Yeah.
So it's just one of those ones where the market will adapt. But you're right, man. Like residential property in Australia, like it's almost a no-brainer.
Yeah.
Now I don't want to say that negligently, and I don't want to say that that just means that anyone should just go buy anything and anywhere and doesn't really matter and just hold it long term. Like you make money, but when you really understand the mechanics and you understand like what goes into it and the effects of that in the marketplace, and you look at the potential of Perth, you look at the direction we're going, this is a no-brainer. It really is a no-brainer, and it's kind of crazy that everyone isn't trying to do this.
Mm-hmm.
But I think a part of that is just the fact that they're misinformed.
Yes.
When you think about and again, I've sat with thousands of clients over the years, but Like a lot of people, like they're quite misinformed with how this stuff works.
Yeah.
You know, that they think, oh, you know, and you know, one client in particular I'm thinking of now, he had 9 properties in Ireland before the GFC, lost everything.
Yeah.
Right. He now works with us. He's got multiple properties. He's well and truly a millionaire now with what he's done here. But same thing. It's like because of what he lost in Ireland in the GFC and how that market worked, he just thought by default, well, that's just how it works here. And it's like when you kind of understand the bigger picture of what we've just gone through in terms of the overall it's like, no, dude, it's way better here. Yeah. and not only is it way better, it's way safer. And not to say that it's guaranteed, but it's like, just look at the numbers on the board here in terms of how many people are it almost can't not go that way. Like there has to be something, like I said, the population has to decline dramatically. Like let's give an extreme example here. Let's say that there was a massive mothership from another planet that came here and they just sucked up 1 million people from Perth. Yeah, sure, population will go down.
Yeah.
But like, unless the population just
we got bigger things to worry about if that happens.
If that happens, I'm not going to give a shit about how much my house in Kenwick's worth. Put it that way. Like I'm going to be thinking about other stuff, not getting probed.
Yeah.
But again, it's just like when you sort of look at it from this point, it is a no-brainer.
Yeah.
But it's also how do we get people to understand that? And not just believe us, but when they go do the work themselves and look at the evidence for themselves, they actually get it.
Yeah.
You know, and that's part of what we're doing.
Yeah.
You know, but
100%.
Yeah. No, the apartment thing is one of those ones. It's coming, man.
Yeah. Yeah, for sure.
It's well and truly coming.
Yeah.
But like I said, it'll be interesting to see what the banking and the lending environment does, because that's the. I mean, I view the banks as like the blood of this. Like they are the blood pumping through the heart. Like we need the funding.
Yeah.
And right now, it's almost like, for lack of a better expression, like our arteries are inflamed.
Yes.
And and that's how it's been for a couple of years now, since COVID.
Yeah.
And it's like, you know, we need the arteries to open up, free up the money, pump it into the market. Let's get some houses built and add the houses to the market.
Yeah.
It's the only way that it's really going to work.
Yeah.
But until the banks actually pull their finger out and listen to us.
Well, that's right. Yeah. I mean, look, they've got shareholders they got to keep happy and make money and those kind of things. So it's kind of in their best interest to loosen it up to a degree, which I think at the end of the day, they got to make money, right? So they're going to make policies that are going to suit them at certain times so yeah, we'll see what happens.
Yeah. I mean, look, I'm confident. Yeah, and I think, and that's the thing too. Like, no matter, even if the banks were to withhold what they're doing, like all that's going to happen is house prices are going to keep going up.
Yeah,
all of our clients are making way more money, and you and me can make way more money in terms of our portfolios. We're just gonna like, I've made more from my portfolio than what Motivate has made me in the last 12 months.
Yeah,
and so again, if they don't fix this, like we're just going to sit back getting wealthier and wealthier.
Yeah,
but like I said before, it's like that's not. Like, yes, it's a good thing for us. It's not necessarily a good thing for society, because if we continue that 10 years time, no one can afford it. Well, fuck, we're now living in a completely different environment that's not going to be as good.
Yeah.
You know, and that's the other part of you know, ensuring that we look at we need balance, right? Mm. I mean, nothing is worse than going down to like Port Coogee, seeing all you can see are tents on the beach because no one can afford housing. Like, that is not a good place for us to raise our kids.
No.
Like, that is not like the amount of taxes that we pay, the amount of money that we give our government. We should not have homeless in this country.
No.
Let alone, if this doesn't get fixed 10 years time, like 30% of the population in Perth are homeless. Like, there is something that is seriously wrong with this picture.
Yeah.
Now, that's obviously a very extreme example, and I would hope to God that doesn't happen. But that, like, this is just unfortunately one of the effects that happens with that. But yeah, like I said, we just have to be adaptable and just play the game with what we know, make our best guesswork with all the evidence and data that we've got, and hope, hope that it works out.
Yeah, for sure.
But having said all that, my man, what my favorite question to finish off with is what you would recommend people to do today. Number one tip for today in 2025. What would it be?
Great question. I think where we are at the moment, and this is probably more towards people who have properties, reviewing their equity position. I think that's super important. Whether that's getting a bank valuation or a real estate valuation, actually just seeing where they sit and what they can do based on where they sit. Because a lot of people actually don't realise how much equity they may have built, not just from buying pre-2020, but even buying 2023, right? Like the amount of clients that have, I don't know what, you see some of the numbers flowing around from the guys and what they say and then how much they've earned or built up in equity for some of their properties. So that's one of my favourite part of my jobs is actually doing valuations for clients' properties, helping them finance a property when they, acquired the property and bought it, to doing the valuation a year or two down the track in a market that's gone up. It's bloody awesome. Like they've completely changed their life just by getting into the property market, and some without even trying, some purposely by investing. But I think for me, reviewing your equity position, not just your home loan in general. You should be doing that regardless, right? But overall is probably one of the most important things to do, to kind of always reset your goals, replan. What can you do with that equity? Like, are you risk averse? Or you're an aggressive investor? Pull out some equity. A lot of people don't even know you can just let it sit there.
Yeah.
I've recently done that. I've done that for a lot of clients who, have bought properties in the past, and they just want the equity to sit there to be ready for their next move, whether it be investing in shares or whether it be buying another investment property, buying a business, whatever it might be. So I think for me that might be a good thing for people who have bought properties previously to reassess their position, see what equity they do have, and then potentially access it and be ready for the next thing that they want to do, because the market's pretty hot. Not just here. There's a lot of markets around the country. So you kind of have to be ready. You got to get your ducks in a row. And if you don't have your ducks in a row, you might get left behind. So that's probably what I would recommend for people to do.
Love it. Great advice, man.
Yeah.
Appreciate you, bro. But thanks for coming on, man. First of many.
Yeah, 100%. Appreciate it, man.
Easy, brother. Thanks for coming in, man.
Cheers.